Hey everybody, this is Jose Blasco here. We are about to get started. This is a sound check. Please go ahead and type a quick message on the chat box. Just a quick hello would do, just so I know you hear me. And we are ready to get started. Please let's do that. So we start on time. I am about to turn on the video stream, so I put myself in the bottom right corners, as I always do. How are you, my friends? It's very good to see you. And we are 20 seconds away from the starting time. So everybody, no matter where you are connected with us, could be our private room, it could be YouTube, etc. Please go ahead and say hi. How are you, Christian? How are you, Maka? Good to see you guys. Very nice. Okay, almost there. 2 seconds to go. Wilfred, how are you? Very good. We are live, everybody. Time to get started. Welcome to the session. Today is July 7, 2021. This is Options with Options. So we're going to take a look at the options markets, isn't it? The name says it all. Options give us options. The beauty is that the markets change, market conditions keep changing, and with different option strategies, we can really adapt well to the current market conditions that are, again, ever changing, and that way put ourselves in a position where we have odds in our favor while we manage the risk and manage the emotions in order to have quality trades executed in our community. So that's the plan. You guys feel free to type in the chat box anytime you may have questions. Let's make the session to be interactive, so you all participate and make sure you don't leave any question unanswered, and you type it, okay? Before we get started, a disclaimer. I am highlighting the disclaimer for you to read. This is in the upper left side of the screen. Please read it carefully. This is important information. It is not too long, so I think it's it's a right expectation for me to expect that all of you are reading this carefully, completely, every word, every sentence, every paragraph. Okay, so that way the disclaimer is well understood. We are trading the financial markets, guys. There is financial risk involved, and everybody needs to be aware of that, especially if you are new to the markets. Okay, so make sure you read carefully the disclaimer and you understand. Agenda. So we just said hello to everybody. So again, hello again. It's a pleasure for me to join you today. We are going to be simulcasting the session, as we always do. So make sure you all understand that depending on where you are watching, from where you are watching the session from, there may be a little bit of differences in video lags. So if you are in our private room on the website, tradewithufos.com/live, or you are on YouTube, or you are on Twitch, or you are on LinkedIn, or you're on Facebook. So depending on where you are, there may be slight differences with video lags. So my recommendation is compare your screen with my screen. And even sometimes I will show the clock so you can evaluate and measure, if you got maybe 10 seconds latency compared to my screen, or 15 seconds, or whatever number that is, should be around that value, okay? Also, when it comes to simulcasting, some of the content will be simulcasted both in the public spaces as well as the private room, and the continuation of the session will be only in the private room in our website. The way we are approaching our coaching is very simple. We determine and we identify very clearly in our community, to kind of simplify it, there are two groups of traders. Some of you are looking at trading as a part-time thing, and maybe 30 minutes of your time to identify some opportunities and ask questions and understand a little better, how to trade and how trading works. That's good enough for you. Some of you are more like me. You never got enough. You love trading. You love it, love it, love it. You always want more. It's a big passion. Okay, so for the ones that you belong to the second group, I recommend you to attend the sessions from the private room in our website. This implies that you need to be registered as a coaching member. For the ones of you that are looking at trading more as a part-time thing, you can indeed enjoy the sessions in the public streams, and you don't have to register or pay for anything. The content is exactly the same. There is no secret sauce in trading or some magic formula or bullet that I keep for myself. Trading is trading, my friends. I'm just gonna help you as much as I can, no matter where you're at. But again, it's a matter of quantity for some of you that are not that passionate about trading. So just attend on the public streams, and for the rest, I recommend you to be on our website. Okay, very good. How are you, Ahmed? How are you, Joanne? How are you, Siderman? It's very good to see you all. Very, very nice. Perfect. Okay, so let's begin. Understanding the market environment is the first thing we're going to do. We're going to look at the S&P. Andrea, how are you? It's super pleasure to see you here, Andrea. Very nice. We're going to look at the market environment. From there, we're going to be looking at the trades that we have running currently in the account and talk about trade management. And from there, we'll move into finding new opportunities. Okay, we meet on the Wednesdays and the Thursdays, and often just because trade management sometimes takes time. So often we end up spending more time on the Wednesdays with trade management and more time on trade identification and planning on the Thursdays. Okay, every day is different. The market, it's also behaving different every day. So we'll just go with the flow and see what's possible. Okay, cool. Anyway, so let's begin with the S&P. Okay, and this is TradeStation. So what I'm going to do here is I'm just going to zoom in our daily chart. You can see here that we have auto climate running. Auto climate on the daily time frame is giving us a thick and blue dot. So the climate is confirmed to the upside. Okay, but having said that, a little bit of a note of caution, because today we just reached 10, where probability suggests that a normal thing to happen is 9, meaning that 10 is more than 9, and therefore we are now falling slightly into the territory where we could call this less likely, right? And the more the market stretches, the less likely is going to stay in that condition and probably needs to take a break, like it normally happens, like it happened here, where for 4 days the market went from blue to red to then go back to blue. Okay, why? Because statistics suggest 9 is the amount of time it should spend being blue, and 3 is the amount of time it should spend being red. So of course, this is an approximate number. This is probabilities. This is not a crystal ball, obviously. And therefore, it's a good reference value. And now, again, notice that we just hit 10, which is more than 9. So it would not be surprising to see the market just take a little bit of a dive for a few days, 2, 3, 4 days, and then go back up and continue moving, okay? Especially the reason why I could see this happen, quite immediately during this week is also because the distance from current price to the next UFO, it's not that great, but more or less significant. So there is room for the market to fall to where the next UFO is. Okay, UFO, for the ones of you new to the sessions, UFOs stand for on-field orders, and therefore we expect a lot of buying around 429 or slightly above 429, 430 if you wish. And when the market comes here, you would expect the market to go higher. Okay, but we also know that because there is room for the market to go down, if the market continues going lower and hits that UFO, because it's a little far from the current price, we may have had a change of climate from blue to red at that time. Okay, this may be tomorrow, for example. And something that we know about the climate and the on-field orders is that when the climate is down, the buy on-field orders tend to be canceled. When the climate is up, the sell on-field orders tend to be canceled. Okay, so in other words, these green UFOs, which are supposed to be very reliable, the problem is that being a bit far from price, when price comes there, we may have had a change of climate, and then they become less reliable because the on-field orders are canceled, and we may see those UFO be gone from the screen, and now the market has open space to again fall for 2, 3, 4 days, like statistics suggest. Okay, so now in the other hand, sometimes the market just keep going and going, and statistics are just a reference, and it's one of those times where you say, oh my god, this is crazy, but it's happening. So it could be that the market just keeps going and going for another 2 weeks nonstop. It could be, but again, based on probabilities, we need to take it easy. Many stocks are making all-time high at this moment in time. I personally love to play that, but I love to play it before all-time high happen. So I take advantage of an all-time high situation properly. Now that the market started making all-time high since, let's say, that particular date, okay, this is all this movement is all-time high. So, getting in now and expecting it to continue going up, it's quite hopeful. While it could happen, is a bit hopeful, okay? Siderman, you have a UFO at 431.51. So I'm using the 55-minute time frame, Siderman. I am using natural hours. Please review that. I am using exchange time zone. Okay, please review that. And my calibration setting is 61.8, okay, which is a fib number. So please take a look at your parameters and confirm if that's the same or not. I know that you and I had differences with the UFOs from time to time, which is extremely weird because the computer processes data, which points at the fact that probably we have different data when it comes to maybe some corrupted data on the cache folder or something like that. Again, it's difficult for me to assess all of this now because then I would spend a lot of time on this instead of continuing with the session. Okay, but with the information I gave you, side your mind, if you don't mind, take a look at your settings and feel free to type on the chat box to, so I know where are you at, and then we can always connect on an email after the session. Okay. Anyway, so let's begin with reviewing the trades that we have. Oh, by the way, I forgot to look at the VIX. So where we are with the VIX? The market is going higher. Okay. At the same time, as the market is going higher, there's been a little bit of a scare, isn't it? When the market opened, it was going down a bit. So you can see the VIX is now pointing at 17%. The VIX is 3.71% higher today. And therefore, it's a great opportunity for us to sell options. Having said that, if you look at the positions I have currently, I have MPC, MDT, and Goldman Sachs. All of those are iron condors where we sold options. And then we got PayPal and AMD, which are double calendars where we bought options. So that means that those positions are negative vega, okay, and the positions below are positive vega. So if I want to balance out my vega in the portfolio, what I need more positive vega, right? So even though volatility went higher, and that's a good thing to sell options, actually, I need to be looking for good opportunities to buy options, okay? Because if not, I would have too much of an imbalance in my account with too much short vega. This may not be your case because you may have different positions in the account, and then definitely then I would suggest that you go ahead and you look for iron condors, okay? But this is not what I'm going to do. I'm going to be looking for double calendars in this beginning part of the session, okay? I got 3 symbols here, so we'll take a look. Now, before we look at new trades, again, let's review what we got. So we'll start with MPC. So MPC, what is happening with that particular trade? So let's take a look at Thinkorswim. So we have MPC right here. If you look at this particular trade, it's an iron condor. You can see that all is 30th of July expiration. Okay, we are using we are selling the 55 and selling the 65. I believe I had documented this on the screen. Let me try to scroll the chart a little bit and we will uncover that information. Here we go. So we have here this information. So 67, 66, actually, it looks like, oh yeah, I remember that we planned on 2 different trades and in the end we changed. So let me go ahead and change that because we had some roll to be done, isn't it? The other week. Let me 50-55, correct. 50-55. Here we go. So 50-55. Let me correct this, guys, so that way it's visual for you and you can follow me. Sorry for that. 65 and 70 is the upper part. Okay, here we go. Okay, so 65 and 70. So I got almost confused for a minute with so many trades and I didn't document this properly, so that's why. But now it's fine. Okay, now it looks the way it should be on the screen. So if you recall, the last time that we met, that stock was moving higher and therefore the dotted line surpassed the solid line. And that meant that based on probabilities, the trade was at risk. Okay, so we wanted to go ahead and plan on doing a tweak, right? We wanted to go ahead and roll some of those options to a higher strike price level to offset some of the pain by collecting more premium. We'll talk about SKT later, Mark, if that's okay. Thank you for that. Thank you for letting me know. But anyway, so if you look at, this is PayPal. We are looking at MPC. Here we go. Okay, now it's loading. So we did this iron condor here, right? It's an iron condor where we collected 75 cents per contract. And basically, the P&L of this trade based on the theoretical values is -4. The P&L of the trade with Thinkorswim is -9. So again, it's about the same. It depends on how much you get when you get filled. But basically, this trade is kind of breaking even a little bit. And why is that? Because we've been in this trade for some time now. So why is that? Well, the reason why it's because, and I also have the expiration date wrong here. I'm just realizing this. Let me put the expiration date on July 30. And normally I document things well on the screen, so I'm sorry about that, guys. Let me adjust the line so you understand where we're at. Okay, well, good enough. So from the last week until July 30, basically, this is what we are looking for. We are looking for the stock to stay in the range, okay? And there was a time where the dotted line was above the solid line, I was saying, meaning that there was a little bit of risk on the upper side, but there were no good UFOs below 56 to rely, because we have a rule, which is we need at least 2 UFOs to do one of those tweaks. So we could not do any tweak, and therefore we let the trade go, and time is passing, time decay is being accumulated. All of this is healthy for the trade, but at the same time, if you think about the midpoint of the range, which is more or less here, so what's happening is that stock now is falling 2%, and therefore is creating a little bit of a challenge by moving away from the midpoint of the range, and that's why we are seeing -4, -9 PNL, because it's moving away from the midpoint of the range. Now, is that movement just some move that is not that significant, or is that movement potentially problematic? Well, how do we know that? Well, we know that by looking at probabilities based on standard deviation calculations and projections of price movement, where now probability suggests that the range is going to be between 62.7 to, let's call it 63 almost, to 53. Okay, so 63 to 53. So let me update the location of those particular lines. So 63 is more or less here, and 53 is more or less here. So basically what we are now seeing is that while there was danger on the upper part of the range, now there is danger on the bottom part of the range, meaning that there is a statistical possibility for that stock to, from now until that expiration date, to surpass, to go beyond our purple area, which is, at the moment you go below that purple area, now we start losing money, isn't it? So in other words, it's time to do a tweak, okay? And how do we do tweaks? Okay, the way we do tweaks is by rolling options to a different strikes, if possible. Which strike is going to be? Well, the rule is we need at least two UFOs on the other side, but also those UFOs need to be beyond the dotted line, okay? And therefore, the dotted line, the next UFO available is right here, okay? So 63.85 is where, we would like to push those options down by that amount, right? So I would like to take the 70s and the 65, close them, collect a profit, and then sell new options at this price level. That's what I would like to do, okay? Now, what's available, okay? What's available? So if we look at the option chain using July 30 for that particular stock, we are using 65 and 70, right? Do we have something closer to 63 something? Yes. So 63.85 actually seems to be pointing at 64, okay? And since this option strategy is using strike price differences of $5, so if I'm going to do 64, okay, then I will want to use 69, okay? So the question is that available? And if so, how much I'm going to get to do that roll, right? So let's get those calls, okay? And let's set a rolling order. So we got to roll it, okay? And everything is going to be July. So we stay with July 30. But basically what we want to do is we want to close the 65 and the 70. So that's done. And then what we want to do is that we want to sell the 64, which is a little lower and will give us a bit more premium. And then 5 strikes higher is 69. So if we do that, notice that this particular roll is only bringing in 7 cents of credit, okay, which is a waste of time, okay? So we're not going to do it, because if you do the roll and you get 7 cents of credit and you have to pay commissions to get that credit, really, this trade is not really going to help you that much, isn't it? So in other words, it's not worth it, okay? It's not worth it. And therefore we're going to have to wait another day. We're going to reevaluate this tomorrow. Maybe, if the stock keeps dropping a bit more, or maybe rallies back up and still probability is a danger, but is rallying back up. So now the calls will gain more value, and now you can do the tweak for a greater level of premium. But today, the action to be taken is number one. Okay, I'm going to tell you what to do now, but also I have a question for you, so be ready to answer. So the right action to be taken right now is do nothing, just wait. Okay, that's the right action to be done. But so we can reevaluate tomorrow and see if the trade is better. But the next question is, what if that stock just plummets all the way? So what are you going to do? Just nothing? Well, of course, if you do nothing, the good news is that your risk is limited, because with an iron condor, you cannot lose unlimited. So that your risk is the distance between strikes minus the credit collected. We assessed that before taking the trade. We were happy with it. So that's how we ended up with the trade in the account. So no issue with that. But can we do better than doing nothing? And the answer is yes. Okay, so here's the question for you guys. What is it that we're going to do if the stock just crashes and surpasses 54.20? What are we going to do? That's the question for you guys. I would love to see those answers on the chat box. And then, of course, I will confirm the answer was right, and I'll give you a bit more detail. But please go ahead and type it on the chat box. Wilfred, question, how frequently we need to check one band for potential adjustments? In general, it is expected to check every day or once we are in the trade? Every day. Okay, every day. Yes, every day once you are in the trade, you take a look to evaluate if your trade is still fine or your trade is now at risk. Okay, that's you would do every day, once per day. Okay, no need to overdo it, but at the same time, if you notice that these trades were planned using a 55-minute time frame, so if you only check once a week, you may miss opportunities to do some additional adjustments that could help the trade. Okay, very good, Wilfred. Very good, Siderman. We would convert this trade to an iron butterfly. Okay, how would that be done? Very simple. We would basically close those two options. Okay, the 70 call and 65 call. We would just close them, and then we would go ahead and sell the 55 call. Okay, and we would buy the 60 call above. Okay, so this is how you would convert that, and this would bring a huge amount of credit that would really reduce the risk of the trade by a huge, tremendous amount. So now you're not going to lose what we plan to lose. You would lose much, much, much less. Having said that, if that was to be the case, the downside of doing this is that now your profit area would become something like that. Okay, so now you will need the stock to remain in that type of area from now until July 30, okay, for you to profit. If the stock was to go below or above, now you would lose, but the amount of loss would be so much less compared to what it was when we planned the trade. Okay, so again, we talked about that in prior sessions. Hopefully these type of scenarios and situations will happen live while we're in the session, so we can act on them as we have done in past sessions. And ideally, you guys practice these trades. You don't need to use real capital, but at least in a demo account if you are newer to options. So you can practice this and see it happen in your account and have to take the decision and have to take the action, because this is how you learn. Okay, guys? And then you come to the sessions with questions, and this is how you're going to pick up some skill. Okay? Very good. Maca, Jose, can you take a look at the premium again? I see 74 in TOS. Okay. Maybe I didn't look at it correctly, or I did it backwards. So no, actually I did it right. So you would buy the 65. Yes. You would sell the 70. Yes. And then you would sell the 64 and buy the 69. Yes. So everything is moved down by $1. I have it correctly. So unless there is an issue with the data feed with Thinkorswim, I have it right. Maca, be careful. By default, the expiration dates would be different when you select a roll. So maybe that's why you get more premium, because you are rolling into the next expiration date, which is not what we're doing. Okay, we are not rolling into the next expiration date. We are just rolling vertically, but we are not rolling in time. Okay, so take a look at that and confirm, please. Anyway, so nothing else to say about MPC. We just wait. Tomorrow we'll review. If it surpasses the bottom line, then you want to have your iron butterfly, ready to be executed. By the way, you could automate that. Okay, you could automate it. How would you automate that? Well, very simple. The same rolling order serves. So you can go ahead and select, we said sell the 55. Okay, sell the 55 and buy the 60. So that would be your conversion to an arrow butterfly. You can see how it's bringing so much more credit in, isn't it? But of course, you don't want to execute that now. So you will want to create a condition, right? Which is if MPC goes below, okay, it was 54.20, okay, then convert it to an arrow butterfly, okay. And also here we can talk about, limit prices. To keep it very simple, I'm just gonna set a market order just so I get filled if that's the case. But please, in your case, don't do that. Don't set a market order, okay, because you're gonna get tons of slippage, okay. So just do some sort of price projection, get whatever simulated price you expect to get, and input that as a limit order. So if you get that price or better, you will get filled. So you don't get tons of slippage on the way in, okay? Even though it's a defensive order, okay? So this is one of those extreme cases where I would not mind to use a market order if I was doing this with a very liquid stock, okay? But it's not the case of MPC. So I'm gonna do it with a market order because this is a simulated account, as you can see on the upper left. So then I'm gonna use a market order, but I would never do that with my real account. I would use limit orders. And again, if you're around, which you should, when you do these type of trades, it would be recommended to set an alert and then go do the roll manually so you can negotiate your spread. That would be a more efficient way to do it, because to be honest, it doesn't matter too much, if it's a little above or below 54.20. You don't need to be precise, because if it's a little lower, well, yes, you will get paid less for the calls you sell, but you would get paid better for exiting the calls you currently have, and vice versa. If it touches 54.20 and goes back a little higher and you do it then closing those will pay you a bit less, but then selling the new calls will pay you a bit more. So you don't need to be that amazingly precise, okay, when doing those tweaks, because we are basically trying to help the trade. It's not about entering a new trade where you need to perfectly evaluate risk and reward and everything. Here is about helping a trade that is potentially in trouble, knowing that even if you did nothing, your risk is under control, because the much you can lose with an iron condor is limited, and we know that, and we calculated that when we planned the trade at the beginning. So we don't need to get too perfectionist at this. This is a danger. This is one of the things I used to do at the beginning of my trading journey. I would get so perfectionist. I wanted everything to be automated. Well, it's okay to let your trading platform to breathe a little bit, and yourself to breathe a little bit. And working with alerts instead of orders is also very useful in cases like that, okay? So anyway, I'm going to use market order again one last time, because it's a simulated account. I will never do that in a real account because you may get too much slippage, okay? But I'm going to place the order, which I did. So if I did, right? No, not yet. I haven't done it. I placed the condition, but not the order. So let me place the order now. Here we go. Oh, it's being rejected. Okay, so when you see a rejected order because the system is missing quotes in a simulated account, this tells you it's not a very liquid stock. Okay, so you need to make sure that you use those limit orders. Maka, how do we do the price projection? Good question. So you come in here, okay, and using the July 30 expiration date, you just enter the trade you would want to enter. So you right click to analyze and buy or sell. I'm just gonna pick, whatever. I'm gonna have to modify this to be a custom strategy. So I'm just gonna use Iron Butterfly or Iron Condor because it's 4 units. So I'm gonna do that. And the moment I have it here, okay, the moment I have it here, which is the one below, correct? So what I'm gonna do is I'm gonna make it custom. I'm gonna make it all calls. Okay, I'm gonna make it sell the 64 and buy the 69. I'm just basically going to replicate the same thing I had in Think or Swim, isn't it? And I am buying the 65 and selling the 70. Okay, so I'm just replicating the same thing I had with Think or Swim, which again, you can see it's giving me the same value, right? And did I uncheck? Okay, now I need make sure you uncheck the other iron condor. I don't need that one. Okay, and now with having the one below set up the way I did, okay, and it shows the wrong strikes. That's a bug in TradeStation. Okay, remember, if I change the units and then I minimize again, now it's gonna be fine. So I got 64, 69, 65, 70, right? So this is the thing. This is the tweak, which is gonna bring in 6 cents if I was to do it. So, my friends, you're probably thinking, Jose, what's happening to you? We are not doing we are not doing the tweak. We are doing the iron butterfly. Sorry, guys. I was thinking about the next trade. So sorry for that. So it's selling the 55 and buying the 60. Okay, now I did it right. Sorry, guys. So selling the 55, buying the 60, and then closing the ones above 65 and 70. This is gonna bring in to 62, which is what we saw on Thinkorswim. Okay. And now, how do you evaluate? How much the price of that strategy would be. When that stock hits 54.20, which is the bottom solid line. Well, you just add one more price slice, okay, and you just customize the value to 54.20, and now you come here where it says value, okay, and here is going to tell you that the credit you would collect would be 128.68. In other words, $1.28 instead of 2.5, because of course if the stock drops, the calls lose value. So instead of 2.5 at the time of the problem, you would collect 1.28. So then what you could do with Thinkorswim is to place an order, which is a limit order, okay, for a credit of 1.28, because that's the estimation. So if at that moment in time that price is hit, okay, that price or better, right? So the line is hit and you have this price available in the market or better mean a credit of 130, 140, 150, anything above 128. So then you will get filled. And if it's less, then you would not get filled, meaning that you are not helping the trade, but also you don't get slippage. So you could place an order like that, and that would avoid you the slippage. But again, I would certainly add the alert for you then to go back and review, okay? And know if you got filled or not, or see if you want to readjust your limit price so you don't miss the fill. Anyway, guys, spent almost 30 minutes on this trade, so we need to keep going, guys. We have a lot of things to review. It's something that happens often to us on the Wednesdays, isn't it? Because we have many trades to be reviewed. But anyway, let's keep going. Very good questions, everyone. So MDT. So what's happening with MDT? Okay, so when we look at TradeStation, oh yes, I remember. This is a trade I did not get filled on, but we said that we would kind of observe it. Okay, so this is a trade where we were filled, or we planned it on 624. I did not get the fill. And basically, so this trade is doing its thing. Again, this is a trade that would profit if we hit July 16 and price remains in the purple area. So the question is that stock doing well or not? And should we do something? So again, I'm looking at MDT now, and we can see how the one standard deviation is pointing at 131, 123. So 131, 123 is here. So 131 is more or less here. 123 is more or less here. And you can see that so far, even though it's a little bit almost kind of challenging the upper part of the range, so far we are fine. The dotted line is within the solid lines, and therefore this trade is likely going to end up within the purple area, especially as you can see that 3 UFOs are there ready to protect that market to go higher and turn down lower if that's the case. And therefore everything is looking good so far, and nothing to comment. If you are in this trade, you are filled, Siderman, very good. So if you are in this trade, then you are doing well, and you're just going through the process of profiting from this trade. Okay. Goldman Sachs, next trade in line. So let's take a look at here. Here it says also kind of break even. Okay. So what is Goldman Sachs? Well, Goldman Sachs is an iron condor that expires on the 9th of July. This, my friends, is 2.5 days from now. Okay. And the P&L of the trade is kind of break even. Okay, so why is that? Okay, well, it must be because that market has moved a lot and is not exactly where it needs to be when it comes to the range, isn't it? And look at that. That's exactly what just happened, right? So we work on this trade. When we started with this trade, we were using the 392, 390, 342, 340, and last week Goldman Sachs was going up like it was going to the moon, and we ended up having a reading with a dotted line above the solid line, so we had to tweak it, and we tweaked it by selling the 362.5, 360, and closing the 342, 340 for a profit. Okay. So let me, before I continue with the chart, let me look at the risk profile for Goldman Sachs. So where are we at? Well, the net profit of this trade is actually $25. Okay, and you're gonna be like, how can it be $25? Well, in Goldman Sachs on Thinkorswim, what we have live in the account now is pointing at -2. Why is it really 25 positive? Well, because when we did the tweak last week, we closed the puts for a profit, we sold puts at a higher price, at a higher level, with higher strikes, I should say, with more premium, and therefore we locked in some profit, where when you add that profit already locked in together with the real-time P&L of the account, which is -4, well, you can see how our simulation is pointing at positive 20-something dollars in as a net result by combining everything, okay? So that's fine, okay? That's great. But let's look at probabilities, because now it looks like the bottom part of the range is being challenged. First, it was the upper part of the range. Now it seems that the bottom part of the range is being challenged. So let's take a look. Statistics suggest that that stock should remain between 377 to 360. So 377, I guess, is easy to spot. It's in a nice location somewhere here. Okay, so fine. That's where, you know, that market should go the most from now until Friday. But the bottom part of the range, it doesn't look like that at all. It shows as 361. 361, it's quite obvious, okay, quite visual. It's below the solid line, okay? The new solid line that we added last week when we lean against a UFO that was located here. That was very helpful because that UFO created that move, but then price went down and now it's hitting the next UFO and now it's coming back up. So thank you very much, Mr. UFO. But while we are back inside the range, the reality is that statistically speaking, we are at risk. Okay, we may end up below, right? So what do we need to do? Well, we're gonna work on the other side of the range now by identifying the dotted line and look at two red UFOs. This is UFO number 1 and this is UFO number 2, and look at 384 as a valid strike for us to move those upper calls to that particular level. Now, I believe the 384 strike will probably not exist. It's going to be the 385. So let's go ahead and take a look. But basically, the idea is going to be to roll those options, okay? So let's take a look. Yeah, we got 382.5 and 385, okay? So let's take a look at the call side. And let's pretend we want to roll it from 390 and 392.5 to everything July 9. We want to roll it to sell the 385. And we got $2.50 of strike price increment. So then we want to buy the 387.5. Okay. So did I do that right? Yes. So notice that the amount of credit collected if we do the roll is extremely, extremely limited. Very, very, very much limited. Okay. It's really not helping at all. Okay. Really, really not helping at all. Why? Because so much decay has taken place. I bet you that if we look at the Greeks, they are distorted. Okay. So if you look at the 385 option, that would be the one we sell, it shows that theta is 22 cents. Okay. So you're going to make 22 cents per day. Okay. And we got 2 days and a half to go. So that's, 60 cents if you wish. But when you look at the extrinsic value, it's only 20. So the reality is that the most you can make is 20, but the Greeks are telling you you're going to make 60. Greeks are distorted. Why? because price is too far away from that strike. We are too close to expiration, and we see that happening all the time, isn't it? So rolling is not providing an advantage because of that, okay? At least rolling to such a far away strike. So what's the other possibility since we are at risk, okay? Well, the other possibility since we are at risk is to do an iron butterfly right now or to close the trade right now. Those are the other two possibilities. Close the trade right now, and then you would be netting $25 per contract, which is not amazing, but you are at risk and you end up in a profit, so perfectly done. The other possibility, and we're going to assess that, is to set up an arrow butterfly now, because being a nearer strike, we may end up with a proper advantage on the trade, and then it justifies to stay in the trade until the day after tomorrow, and hopefully end up with a better profit than $25, which is the profit that we have now. So let's evaluate if that is a valid choice or not. Okay. So what if I close those calls? And on the chart, remember now we are short 362.5 put, 360 put. So I'm going to have to use the 362 and the 365. I will write down this on the chart later on because it's a lot of moving parts, and I'm pretty positive that it may be driving some of you a little bit crazy with so many moving parts. Okay, but again, it's a matter of repetition and getting used to this, so you'll be fine. Let me do it first, then I'll write it on the chart so everybody follows. So 362.5, this is the one we would sell. 365 is the one we would buy. If we do that, we are going to collect $1.83 of credit if we do it now. And my friends, it looks to me that this could be interesting. So let's find out how interesting it's going to be. Let's go back to the analysis tab. Here's our position with Goldman Sachs, the one that is currently netting $23.5. Okay. So let me duplicate this position so we can analyze the current position versus the one we would create. I will uncheck the current position. Okay. So what I'm going to simulate is only the new position we're going to create. And the new position we're going to create is going to be made of calls and puts, where the new strikes for the calls are going to be, okay, I need to make this a custom. Here we go. So the new strikes are going to be 362 and 365. Okay. And so these are going to be the strikes. Okay, so we're going to be doing 360, 362.5 for the puts. Okay, this is what we already had. 362.5 and 360 for the put. That's what we already have. So what we're going to do now is that we're going to add the 365 call, and we're going to add the 362.5 put. Call. Okay, we already have the put, so we're doing the call. And by doing that, now we have an iron butterfly. Okay, maybe to be a bit more visual, maybe I'm just gonna do something like that. So you guys, something like this. So basically, where the 362.5 strike is, we're gonna end up with a short put and short call, and above we have a protective call, and below we have a protective put. That's your iron butterfly. Okay, so we are moving from an iron condor to an iron butterfly. This is what I added in the simulation here. Okay, now how much is going to be my entry price for this trade, given the fact that I am entering this trade in two steps? The first step is what I got, which is 61 cents. Okay, so this is the amount of credit I already had, right? And on top of the credit I already had in the account, what happens? Well, if I roll it for 180 now, I'm going to add, okay, I'm going to add to my 0.61, I'm going to add 1.8. Okay, not that you need a calculator to do that, but now it becomes 241. Okay, 241. So what happens if I do that? 241. Well, if I do that, we now, my friends, end up with this particular position. A position where here's the zero line. So above that line you profit, below that line you lose, right? Notice that the amount of loss below the line is crazy low compared to the amount of money you could make. right? So that's why I was sensing it could make sense to do it, okay? But the very key and very important aspect to accept or discard the trade as well is what do we expect when it comes to probabilities, okay? Because probability suggests the stock will be moving from 359 to 375, and here for you to be in profit, the stock needs to remain between that point, which is 365, okay, to 360. So in other words, let me draw it. Okay, so what is our new profit zone? Okay, so 365 to 360. Okay, and I'm going to change this to be the fill. Let's make this light blue. Okay, so this is the new profit zone. Okay, so for example, the stock is currently trading at 367. If the stock stays there, we will not profit on this trade. Okay, the risk profile is very clear, and it's telling you that at 367, we are currently in a little bit of a profit, $17 if you account the conversion from the iron condor to the iron butterfly. But if the stock stays there, you will end up losing $9, which is the most this trade can lose. So the question is, what do? You take $25 and you are done with Goldman Sachs, or you stay in, knowing that the worst case is to lose 9 in exchange to make up to 237 per contract, right? Well, let me tell you, to me, I stay in. Why? Because if you make 25, you need to account on top of those 25 the commissions you already paid to get into the condor, the commissions you paid to roll it, and now the commissions you need to pay to convert the condor into an iron butterfly. So those 25 will end up being like, I don't know, $5, $10 of profit net. To me, that's not worth it. Okay, it's not worth it. I'd rather risk 9 with a potential profit of 200 over. Okay, but again, maybe the stock end up trading at 363 and then you make 140. You don't make the full 200 plus, but it's definitely better. Okay, definitely better than doing than, at least to me, definitely better than collecting those $25 and having paid all of those commissions. The broker will be happier with you. But I would prefer to just let this trade die and expire. By the way, this also has an implication within a potential assignment. Okay, but we'll talk about that tomorrow not to make this too long today. Okay, so I'm going to go ahead and roll. 190 is the credit I may get now. So it seems that credit is picking up. Thank you very much. So let's see if I get filled or not. So I just placed the order. Okay, I'm just gonna flash it here so you guys can take a screenshot. Okay, so you know which units we're buying and selling. It's all July 9. We are now converting the Goldman Sachs iron butterfly into an iron condor. Yeah, I get you. I mean, we could get into trying to predict where the price is going to be from now until Friday, but now you're kind of semi-intraday trading a non-directional trade. So, again, I would not do that. Okay, trading is a combination of managing your emotions, managing your risk and reward, and having an edge when you trade. Do we have an edge directionally with the auto climate and the UFOs? Yes. But also we are dealing with a market that closes, more hours a day that it's open. Stock market is only open 6.5 hours a day. So the climate may change overnight because something happens to the financial industry. And next thing you know, Goldman Sachs is going crazy in either direction. And then your prediction for direction is basically not working well. So in this case, I'm going to give priority to reward to risk ratio, kind of pretending I don't know how to trade. I have no idea where the stock is going. You know what I mean? This is one of the cases where the reward to risk ratio is so significantly better. Risking 9 versus making $200 plus. What's the reward to risk ratio on that, right? So certainly the massaging that we have done for the trade during the life of the trade by doing the rolls and the tweaks allow us now to be in that type of position, which is not ideal, obviously. Ideal is to stay in the purple area all the time. That's ideal. But when you have to get defensive, this is certainly an ideal situation where now you may lose $9. That's the worst case. Okay, this trade started with a $200 risk or something like that. Now the worst case is 9, right? So it's certainly a very good situation, and therefore no need to overthink about the trade. Let's find other trades. Worst case for this one is lose 9, right? Peace of mind. That would be my approach in trading. This is what I'm sharing with you. Of course, different mindsets and trading philosophies may see that differently, and there is no right or wrong. It's about you having a plan and implementing the plan the way you do it, mechanically speaking, and so on. Anyway, I'm gonna push this trade to get filled. Don't do this, but I'm gonna do it by replacing the order. I'm gonna lower the credit because I want to get filled, so we can talk about it tomorrow, and I can, basically lead you into how to maintain this trade throughout the life of the trade. That's it. I got filled at 182. Don't do that. If you are doing this trade, please shave your spread properly. And once you get filled, report it on the chat box so everybody can see, and we help everyone if you wish. But at the same time, I do want to rush myself, so we have more time for the session, and also I make sure I'm filled so I can comment on that in future sessions. So I help you from a coaching and educational point of view. So 182 is what I got. Okay, so 182 is what I got. So if I go back to here, I want to readjust my values. So we got 61 plus 182. That's 243. Okay, so that means that this trade now, if it's my case, worst case you lose 7, best case scenario you can make 230 something. Okay, that's what we have, and we'll talk more about this tomorrow because there is a risk of assignment, as we have discussed before, for iron butterflies. Which, when I say risk, is because that's how it's phrased in the industry, but we can certainly eliminate that risk quite easily, before the market closes on Friday. So we'll talk about that tomorrow. What else? So many things to discuss. What else? PayPal. So what's going on with PayPal? Okay, PayPal has been a challenging trade. Okay, that stock is unbelievable, going to the moon. We started the trade here at 240 something. We expected the stock would not surpass 288. The stock is currently trading close to 300. This is like probably 25% in a month or a month and a half. Amazing. Congratulations, Mr. PayPal. But how is that translating into our account? Well, it's translating into a negative P&L of minus 354. So this trade is problematic. Okay, this trade is losing money for us as we speak. Now, when you look, and by the way, you may notice I am short shares. Okay, so I need to talk about this. I need to remind you what we discussed the other week because it's absolutely imperative for you to understand this well. So if you look at the account, PayPal shows a loss of minus 1,413. You're going to be like, how can that be? In TradeStation, it shows only minus 300. Okay, and that's the case. Why is it on TradeStation it only shows minus 300? Well, because we had accumulated prior profits where if you add them together with what you have in the account currently, altogether nets minus $300 of risk, which is fine. We started with a risk of 300. The worst case is to lose 384, and currently this trade is losing 350 something. So everything is according to plan. Everything is working well from a rates point of view. Of course, the stock moved huge amounts that was not expected. So the trade is losing money. So that obviously is less pleasant than when trades make money. But we obviously know this is part of trading, and it happens all the time. The key is to manage the risk. And we are doing very well managing the risk here because the worst case is to lose 384. Okay. Now, of course, if the stock starts falling down, okay, so this trade could, relatively quickly start, making some money. But at this moment in time is basically showing a loss. Okay. So what to do? Well, we talked about this last week. And the problem is that selling the calls was providing distorted Greeks. Okay, so PayPal is supposed to be a double calendar. We should have 4 options. Okay, but instead we only have 2, and we are short 100 shares of stock. Okay, so this is how you would have seen yourself on Saturday, right? You have plus 1664 Maca. Did you sell options? Did you sell the call on Monday the way we discussed? because I didn't. Okay, I didn't because I wanted to show you how you do it. That's why I'm still short shares. But if you did, of course, you're gonna be in a better position than me. Okay, so basically we should be in a double calendar with 2 calls and 2 puts, but instead we got a put and a call and short shares. You did. That's why. Okay, so you are doing a good job. Now I did not do it on Monday because if I had done it on Monday, the problem is that I cannot show you. So that's why I left it like that, right? And the other thing about the calls, and we didn't do it last week, right? If you recall, it's because both the calls and the puts are so deep in the money for the call and deep out of the money for the put that there was no way to get, a significant amount of anything that makes sense. So for example, if you sell the 260 call, it's going to bring in 10 cents of extrinsic value. It's so deep in the money that it doesn't really help much. Okay, if the other option that we want to sell is the 230 put. Well, imagine if the 230 call only pays you 10 cents of extrinsic value. If I load the 230 put, it only has 2 cents of value with 2 cents of extrinsic value. So it's not even worth it to sell because the commissions you get are basically nothing. Okay, so the idea on Monday, and Maka, please answer this if that's okay. The idea on, well, I keep saying Monday because it's I'm used to say Monday. Obviously Monday was a holiday, so it's Tuesday. But the idea on Tuesday, right, it was to this is, let me see, Tuesday was on the 6th. Yeah, correct. So on the 6th, that was here. Yeah, so the closing price on Friday was 292.64 and the opening price 294. Got it. Yeah. So yeah, it was about the same thing. It didn't make a difference to be short shares. And if you had sold the calls on the Thursday, you would have collected plenty of premium. Okay, probably more than me now. But at the same time, you would have collected a loss on the stock. So again, we are back to square one. If I simulate this, okay, let me simulate so you understand. So if I sell the 260 call, okay, sell the 260 call, and I close the stock, which I'm going to emulate by buying shares. Okay, so we have, let me explain all of it. So we have our custom strategy. Okay, we have our short shares, we have our long shares, which close the short shares. Okay, so if I got long shares and short shares, so this neutralizes itself and locks in $3,000 of loss. Okay, which together with all the profits made before and so on, that would now become, if we add all of this, it would become $345, which is, you stay where you were, right? Now, the worst case now is that instead of losing 384, the most you can lose is 338, which is basically what you got. Okay, and if the stock was to go back down, ideally back to 260, so then you would actually go back to profit to 393. So in other words, it makes sense to sell the 260 call and close the stock, because you're gonna stay in that position where your net profit is negative 300 something, and you put yourself in a position where you may lose a bit less, or if the stock falls and falls hard, you can actually end up in a little bit of a profit. So it makes sense to give the stock that opportunity for the rest of the week. Okay, and tomorrow we'll talk about what about next week. Okay, so we'll talk about that tomorrow. Even though between us this trade looks terrible, this trade is very likely going to end up as a loss, which is great because it's a contained loss that we have diminished during the life of the trade, even though it's not ideal because we'd expected the stock not to surpass 288, and currently the stock is trading at 296. Okay, so anyway, so time to close the shares and time to sell a call. So I'm just gonna do it. Okay, the way you would do it is, I'm just gonna first buy 100 shares to close the stock. Okay, I'm just gonna do it at market price so I get filled immediately. Okay, so close the shares, send, So I'm out of the shares and I locked in a huge loss on the shares, which together with with a huge credits collected before, which are profits, okay? So all of these offset each other, okay? And now I'm going to go ahead and using PayPal and using July 9, I'm gonna sell the 260 call. That is gonna give me 3,000 over dollars in credit, which is all intrinsic value, okay? So it doesn't decay, it's all intrinsic value. But we're gonna put this in the account, and just to do it quick, okay, just to demonstrate how it's done, because I'm counting that you guys did that on Monday. I'm just going to use a market order. Remember, never use a market order, guys. Just always use a limit order, okay, and shave the spread. Okay, it's only 25 cents, okay. I guess you should get filled relatively quickly, but just to do it quick, I'm using a market order, okay, and hopefully I get filled very quickly here on PayPal. That's it, I got filled at 36.25. So now, if I add those two values, so the stock I got filled at 296.20. That's the stock. 296.20. That's what I got for the stock. And for the option, I got 36.25. So 36.25. So if you put it all together, so the worst case scenario for this trade with those real values now is to lose 368. Currently, we're losing 355. Okay, that's the case. And if the stock goes back down, best case, we can make close to 400. Okay, but it's very unlikely. Okay, extremely unlikely. So that's it. We got it. Okay, so again, I should have done that on Monday, but I waited so I could show you. Okay, and I know I did it a bit fast. Okay, you can watch the recording, guys, because there is another trade that we need to discuss, and it's basically time to conclude the session. Okay, so as expected, today we are spending a lot of time with review, and tomorrow we'll be focusing more on new trades to be added to the account. So AMD, what's going on with AMD? Okay, well, AMD is also a trade that did something unpredictable or unlikely, right? We expected that stock when we got in around 79 that it would not surpass 93, and here's the stock that went above and now is coming back. But again, amazing moves, right? So that stock also has an expiration date, as you can see here on Thinkorswim, an expiration date of July 16. So it's copy paste, very similar situation compared to what we had with PayPal, but here it did make sense to do the roll, and we got the call instead of being assigned. Okay, so this trade is currently showing $541 of profit in the account. Is that real? Well, let's take a look at the option chain and see what's really happening with AMD. Let me do this. Okay, yes, that's the one. Correct. The one where we don't have the put, so it's 0, but we do have the call, okay? And it's a trade which is a 2-cent credit trading. Here we go. So this is the reality of this trade, okay? So I'll get rid of the other one. So now, where are we at with this trade? Well, this trade is currently making $25.5 with everything accounted for as we have been massaging the trade during the life of the trade. What's the worst case situation? Well, the worst case situation is to make $2. Why? Because after everything we've done, we are in a $2 credit situation. So putting on the side the commissions, worst case, you're gonna make $2. So you cannot lose on this trade. Okay, even though currently it's only making 28 because the stock went so much higher that it's a problem. Now, if the stock was to go down and fall, so this trade could make $195 per contract. That's the peak and the maximum. If the stock was to fall, we got until July 16 for this to happen. Okay, you were assigned on the trade, Maca. You should not be assigned if you did the roll last week. Did you allow it to be assigned and then you close it and sell the call? If you did that, it's pretty much equivalent. But I remember that we did find premium enough with AMD to do the roll. So I suggested to do so. Please comment on that if you don't mind. So anyway, yeah, so that's the trade. Okay, so we're going to wait. Okay, and I'll comment a bit more on that tomorrow on what to do next week. because there is no more to roll, because next week it's the 16th. So we're going to have to talk about that, but we'll talk about this tomorrow to maximize what's possible on that stock. Okay, cool. Oh, you were not filled and you did it on Monday. Okay, understood. So again, you should be in a similar position. So all good. Well done, Maka. Joanne, I believe I just missed your message. Can you say last step again? Oh, I'm just reading you now. I don't know which step you are talking about. Do you mind watching the recording? It's gonna be posted in the room just like 3 minutes after we conclude the session. You're gonna have the recording available. If you don't mind, Joanne. Sorry for that. Yes, correct. July 9 calls on both. You are correct. Cool. Okay, so last one. Lily. This one is a directional trade. Okay, and this one is simpler. So the stock is moving higher. We entered at this price point. Okay, somewhere here we entered. Okay, and it's working very well. Remember, this trade is a trade, Lily, which is currently making 600 over dollars. Worst case scenario in this trade is to make 200 over dollars. So this is a trade that we tweaked already to a point where you cannot lose. And best case for this trade is to make 1,200 over dollars, which for that we need the stock to be above 240. Okay, so if the stock is above 240, we'll make 1,200 over dollars after expiration, which is July 16. And currently we are trading at 234. So, Mr. Stock, please push a little more. Thank you very much. Okay, that's what we need. And let's see what happened. We got until July 16 for that. Okay. So, wow. I really didn't think I would spend so much time with trade management today. But I had to, guys, because, there are many things happening. Those are amazing learning opportunities. Hopefully you guys are on these trades. And if not, you are making notes for when these situations happen to you so you know what to do. Again, I always feel like I want to get at least one trade going in the account, at least every time we do a session, at least one trade. I feel kind of more satisfied in the sense of bringing more value from a point of view of experience for you guys. But at the same time, this is also priceless experience to manage the trades, because you see that if you manage your trades right, what happens is that you lock in profits and expose yourself for more profits. And if you manage your trades right, for the ones that don't work well, you basically take the initial loss you were planning to take and you reduce it, still giving the trade a chance to profit for you. So those are important things for you to master, and definitely I would say it's time well spent, even though I'm maybe it's a selfish thing, but I'm just a bit more satisfied when also on top of that I can add 1 or 2 trades. But we'll do that tomorrow. Okay. Anyway, we would love to have more time with you, Jose. Yeah, I mean, I get you, my friend. Me too. But it's what's possible, guys. Okay, because we all have things in our hands, isn't it? Thank you so much. It's very, very kind of you, Christian. Love the trade management stuff. Thank you so much. Everyone in the other channels, Twitch, LinkedIn, Facebook, YouTube, thank you so much for attending the session, wherever you are in the world and whatever channel you are connected from. My pleasure, guys, to be your host, and I will see you tomorrow, same place, same time. You guys take care. Keep up the good work. More tomorrow. Bye-bye, everyone. Take care.